whether I am audible now? Hello? 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 Those who are in online, I am audible now? Hello? Those who are in online, am I audible now? This sound. So, good morning all, and today we will start our session. In last class, we have gone the core of GST. So I hear that the basics also the intro I should add much more. So we will start today basics of GST, and then we will go into the GST, the core part. I am sharing my screen. So, are you all able to see my screen in online? So, we will start. So, first thing in this the GST, we have taxes. Taxes are of two types, direct tax and indirect tax. So, what is tax? So, we have the definition for this tax. It's the primary source of revenue to the government for incurring public welfare expenditure. So it is a source of income to the government, and the government use for the public welfare purpose. So the tax is basically now which we are in the paper 7, we have two types of taxes. One is direct, the other one is indirect. So first let me share about the basic, then we will go into our book area. So what is the main reason why the government is imposing the tax? So the main reason is to provide the basic facilities for every citizen of the country. So we get some government hospitals, electricity, and some government schools and free houses for the poor. For these are the basic facilities from our tax which we have paid to the government. So the government utilize those funds for the basic facilities purpose and to finance multiple governments. So we have our municipal corporation, panchayats, block panchayat, village panchayat. So these are the local governments, and for that purpose also our tax money we are paying it to the government. From that money they spend for the local some road, if they want to construct road or houses or the hospitals, for these purpose, and then for the protection of the life. So some that is external life and wealth from the government in case of external aggression, internal armed rebellion or any other situation. And even for the military peoples or the army peoples, if the payment to them, to their family, or the payment to as a salary to the army peoples, these are the basic reasons why we pay tax to the government. So the tax are of two types, which is direct tax and indirect tax. So what is direct tax and what is indirect tax? Let me will brief. Yes, that is mainly for the militaries, armies. These are the those purpose. From our tax purpose only we are paying it to the peoples. And then we have two types of taxes, like direct tax and the indirect tax. So what is direct tax and what is indirect tax? So the impact or the incidence fall on the same person. So what is impact and incident fall on the same person? We pay from the salary directly to the government. So which the assessee personally himself paying to the government, that we call it as a direct tax, and it is levied on income, that is example is income tax, and this is progressive in nature. We call it as progressive in nature. What the meaning of progressive in nature is, so how much income you are getting, so on that basis our taxation differs. So if I earn high salary, then I pay more tax to the government. If my income is low, accordingly, if I am eligible to pay tax, then I am paying tax to the department. So that we call it as progressive in nature. So higher tax are levied on person earning higher income and vice versa. And the other part, indirect tax, the incidence and impact fall on different person. So those who are in a call, whether you are able to see my complete screen. Okay. So Pratik on a call, can you please recheck? I am in the screen direct and indirect tax. So whether you are able to see completely? Okay. Okay. So the indirect tax meaning, so the incidence and the impact fall on different persons. So fall on two different persons. So one will be from the manufacturer to the from the manufacturer to the final consumer. So from the manufacturer the goods move on to the wholesaler, retailer, and then to the final consumer. So the incident and impact fall on different persons and the tax is recovered from the assessee who passes such burden to another person. It does not pinch the taxpayer. Meaning here is that I will show with the example what is the impact, how it is recovered from the assessee. I will share with the example in the next slide. And the indirect tax, it is levied on goods and services, and this types of tax leads to inflation and have wider base. So direct taxes, we are paying on our salary, and indirect taxes on goods and services. So based on this, the price inflation and this arises. That is, this type of tax which leads to inflation, meaning the price increases because if you see from the manufacturer, it moves on to the wholesaler and he adds on the margin, and then he moves on to the retailer, again he adds some margin on that cost. So due to this, there is an inflation because of the indirect tax. The example, we have GST, customs duty, these are the indirect tax related. And then the direct tax we called as progressive in nature. That is, if your income is 5 lakhs, accordingly we pay tax. That is based on the slab rate, like 30% or 20%, 25% or 5%. Now, here indirect tax, we call it as regressive in nature. So, regressive in nature is depends upon the whether if I am earning 2 lakh income, if I go and purchase some soap or any dress from the market, from the shop, I am going to get the same price. If it is 200 and the soap is 50 rupees, I get 50 rupees only. Even if it is a rich or poor, say if I am annual income is 2 lakh or annual income is 1 lakh, even if he goes and buys some the same soap or dress materials, the price will be same. That is regressive in nature. So rich or poor, the price is same in case of indirect tax, and he also has to pay the same money. And this is a useful tool to promote the social welfare by checking the consumption of harmful goods or sin goods through higher rate of tax. So GST, if it is something like we call any harmful which creates some harmful type of goods, government impose more tax so that people will not go and buy. If the price will increase, and we may not be buying that particular products. So it is an useful tool to promote the social welfare. So I'll move on to the next slide. So we have the same in detail here. It's from our book only. So indirect tax, direct taxes, tax levied on persons' income and wealth, and it is paid directly to the government. So it is paid directly to the government, and in case of indirect tax, we don't pay directly, it is indirectly. So we don't check when we buy some dress items whether how much GST we are paid, nothing. So we pay whatever amount it is, we just pay the amount. So it is an indirect, indirectly we are paying to the government. So it is levied on a person who consumes goods and services, and it is paid indirectly to the government. The same, the nature is progressive, and here we call it as regressive. The incidence and impact. So if you write this particulars, like what is the basis, if you remember the basis, suppose even tomorrow this question is asked in the exams, it is easy to write. Like what is the meaning, nature, the incidence and impact. Incidence and impact is so it falls on the same person, whereas here indirect tax different person. Whoever goes and buys the materials or the products from the shop, it depends. And the example we can mention here, and evasion. So these are the new terms you may come across, like a tax evasion. So what is tax evasion? So if even my annual income is 5 lakhs and if I have to pay that tax, I may pay, I may not pay. So once if any notice comes, then I have to address that. We call I may pay or I may not be paying also. That is tax evasion. So in case of indirect tax, you can't say to the when you buy some any detergents or any items, you can't say that it's not possible for me to pay the GST amount. So whatever amount it is, you have to pay it. So that is tax evasion is hardly possible because it is included in the price of the goods. If you buy the any mobile, it is already included. So you can't say the GST I will not pay the indirect tax. So it is hardly possible because it is already included in the price of the goods. So what then inflation? So when you make direct tax, it helps in the reducing the inflation. But in case of indirect tax, it is the cost of goods and services which increases. So indirectly it increases our inflation also. The imposition and collected. So it is whoever earns. So it is on the particular assessee only it is imposed and it is collected from the same person. But in case of indirect tax, so it is from the different persons, that is imposed and collected from consumers of the goods and services but paid and deposited by the assessee. And the cannot burden we cannot shift in case of direct tax, and in case of indirect tax it can be shifted. So in the example we can see, so the last one is the taxable income of the assessee. The event is the taxable income. Here it is supply of goods and services. So we know it based on the direct tax. If you remember the income tax, so then you can easily mention all the other points, like it cannot be shifted, it is on the taxable income, and the tax evasion and the nature which is progressive nature easily mentioned. Parallelly you can remember for the indirect tax as well. So here with us, I am sharing, this is with prior to GST how the situation is, and post GST how it is. So now so if you see it is of two types of taxes, direct tax, indirect tax, and we pay directly to the government and we pay government via third person. So this screen which you are all seeing, I am sharing with example. So prior to introduction of GST, how the situation is, and post introduction of GST, how it is. So this is for example purpose only. So here for indirect tax, against that mentioned example as service tax. So before introduction of GST, we have different types of taxes like VAT, value added tax, central sales tax, service tax, multiple types of taxes we were having. So here just mentioned the introduction here. So for direct tax, you can see he is earning the income and paying directly to the government. So income tax of India. Below it is example for indirect tax. Family in a restaurant and they are paying money to the reception, paying money, and indirectly it goes to the government, that service tax. So it is an indirect tax. So we have under indirect tax, and this is only I am sharing prior to the introduction of GST period. Under indirect tax, we were having central government and state government. So that period, the taxes were excise duty, we were having paying to central government, service tax, CST, customs duty. And under state government, we are having VAT, entertainment tax, luxury tax, octroi or the entry tax. So these are the taxes which we were bearing earlier under central and the state government. So you can see VAT also, entertainment tax. So what is entertainment tax? So if we are going for any movie kind of, there they put additional tax, that is entertainment tax. So and then luxury tax, octroi or the entry tax. So then now there is still no change in the direct tax. We are having changes in the indirect tax area. So all these two taxes now under one regime, which is GST. Both excise duty, service tax, CST, customs, VAT, entertainment, luxury, octroi, everything is come under one head, which is goods and service tax. So what is, so now we are having both, earlier period also we had a central government and a state government. Now also there is a bifurcation. What are the taxes which has gone into CGST and what are the taxes gone into SGST? So now if you see that excise, service, CST, customs has gone into central goods and service tax, and for state government, VAT, entertainment tax, luxury, entry tax gone into now state goods and service tax. So now we are talking about the last few minutes about the goods and service tax. So what is goods and service tax? It is a comprehensive tax levied on manufacture, sale and consumption of goods and services at a national level, and it will be levied at each stage of sale or purchase or services based on input tax credit method. So in last call also one student has asked what is ITC, that is input tax credit method. So now we'll see in detail about this input tax credit method. So just introduction of the we are still few things. The history is so big, it is just a summary of it. When the GST introduced, it is introduced by the Vajpayee government in 2000. Later in the Union Budget 2006-07, they have announced the application of this GST, that is in 2010. Later the bill has passed in Lok Sabha and then Rajya Sabha. Finally it got implemented in 2017. And there are, you can see the features also here. These are the very important features, because many times they have asked what is the structure of our GST model, that is dual indirect tax structure. And Dual indirect tax structure, I am sharing this so it will be easy. So what do we call it as dual indirect tax structure? There is an example. If a dealer is in Rajasthan and he is selling the goods to consumers within the state, makes a sale of 20,000. Say for example, I am in Rajasthan and I am selling goods to consumers. The value is 20,000 at and the GST is 18%. So the dealer, so I will be collecting tax amount of 3,600 once I complete this sale. So this 3,600, how I have to pay to the department? So 1,800 to the CGST and 1,800 to SGST. So central goods and service tax, I have to pay 1,800 and to the state I have to pay 1,800. This we call it as a dual indirect tax structure. In the previous thing, if you see, there is central duty, central excise, CST. So most of the transactions there was no correct reforms. How much to the, there is an income to central government high, state government was less, state government high. There is no proper structure. But post this introduction of GST dual model, you can see it is shared equally between the central and the state government. So then what are the other features here? There is no distinguish between goods and services. So earlier we were having for goods purpose this VAT tax, that is value added tax, and service purpose separate tax, which is service tax. Now post introduction we don't have that bifurcation. Then applicable on all on supply of goods and services, so it is applicable for all supply and it is paid to the central and the state government separately. And the place and time of supply is crucial. So here when we move on to the time and place of supply topic, you will understand in detailed manner. So why we call it as place and the time of supply is crucial. So for example I am sharing, just telling this example, what is why we call time of supply is crucial. Say for example today is 2nd of March and I raised invoice to customer, but still the goods are lying at my factory. So when in the time of supply, when we go detail you will understand, but just for example I am telling, in time of supply we will be learning. So what is the whether am I right? So before that movement of goods I have raised the invoice, because today is 2nd of March, I have raised the invoice, but the delivery to the consumer has not happened. So still the goods are lying at my factory, and by 5th of March I am delivering I am shipping the material to the final consumer. So whether am I doing right or when I should have invoiced it? So whether I should have not invoiced today, whether I should have invoiced on 5th of March only, that we call it as time of supply. That is very important in this GST. And place of supply. So I am here in Pimpri, I am buying from a person in Rajasthan. So I am ordering some goods. The person is in Rajasthan. I am ordering. I need some ABC product, 100 numbers. So the person may raise invoice to Pune, but I am adding one more instruction, that you deliver it to the person in Delhi. So in that case, so what GST is applicable? So how much percentage or what is the place of supply he has to consider? So that area, it is very crucial. So the time and place of supply is very important here in the GST area part. And paid on transaction value. So the GST, so if it is 20,000 I am selling, or if it is 25,000 if I am selling, the pay, it should be tax to be paid on the transaction value. ITC to the business houses, this ITC we will take it separately. Objective to remove multiplicity of taxes. So earlier we were having excise duty, central, CST, VAT, service. So now post this introduction of GST, it has removed all those multiple taxes. And so when we were in the pre-GST period, separately we have to file excise return, service tax return, VAT return, multiple types of returns. But post this introduction, we have only one, which is GST return, and it is monthly payment, quarterly return, yearly GST audit. It makes all those complicated things easier way. So the single document for tax purpose and a single return filed with central registry, and the taxpayer to submit the periodical return in common format, both central and state GST. So we call this GST a significant step in the reform of indirect taxation in India. So now the other new term which you are seeing is the mitigating, cascading or double taxation, facilitating a common national market. So one India, one tax, so that we are mitigating the cascading or the double taxation and facilitating a common national market. The prices expected to come down in the long run. So the cascading effect, what is the cascading effect meaning? So here you can see that in detail the cascading effect. So the tax structure here is multiple taxes, VAT, CST, excise, everything. Here we have only unified tax, ITC. So this ITC we have many areas, so I'll just show you. I'm in one next slide, so I just in multiple places we are looking into ITC. So what the ITC, first let me clarify it. In the first thing, sorry. You can see here in the first line, like goods when manufactured, then it moves on to the wholesaler, and the wholesaler finally to the consumer. So the manufacturer, he is buying the raw materials, and the raw material is 100 rupees, and the raw material 100 rupees included 10 rupees of GST, that it is 10 rupees of tax also. I am talking in the pre-GST period. It included 10 rupees, and he is adding some values. So in cost also you might have seen this term, conversion cost. So he buys the raw material. So before he is selling it as a finished product to the final manufacturer or dealer, he adds some additional conversion cost, that is 30 rupees. Now the gross value comes to 130, and on 130, say for example, he has to pay 10% tax. So on 130, 13 rupees is tax. Now the final sale price goes to 143. So now from manufacturer, it moves on to the wholesaler. So now what wholesaler does, from the manufacturer how much money he is buying, he is purchasing it for 143 and he is adding margin on that amount which is 20 rupees. So on the gross value comes to 163 and the tax 10% again and final sales value here is 179. So again from the retailer, what for the money for how much he is buying for 179, he add his margin of 10 rupees and the gross value comes to 189 and the tax is on 10% and the final sales price it comes to us as a 208. So we spend 208 rupees to purchase the any product. So now in the post that is post this GST period, now how this structure looks. So now the product is same 100 and the final sales value of the manufacturer is 143. So if you see this tax, how much he is raising, it is for 13 rupees. So on 13 rupees, when he buy the raw material, it is including 10 rupees of the tax of 10 rupees in this 100 rupees. So now when he purchased the material, 10 rupees tax is there and when he is supplying, 13 rupees tax is there. So now this manufacturer, he will not pay 13 rupees to the government, he pays 3 rupees to the government. He takes the benefit of this 10 rupees and then because at the time of purchase he is paying to the supplier 100 rupees and he is not paying 90 rupees. So he is now taking the benefit of that 10 rupees and he pays only 3 rupees to the government. And the wholesaler, when it comes to wholesaler, and the wholesaler also has the benefit of claiming this 13 and when he add the margin, it will not be on 143, it will be on 130. He add his margin of 20 rupees and then the final gross value is 150. Then on tax on 150 he pays 10% and it comes to 165 the final sales value. Then again to the wholesaler, when he buys from the again to the retailer, when he buys from the wholesaler, it is for 150. On 150 he add the margin of 10 rupees, then the gross value now it is 160, then the final sales value now to the final to us, that is to consumer, it is the price of 176. So if you see in both the places, like in pre-GST period, how much the price the product sold to the market and how much in the that is in the after introduction of GST, how much it has been sold to the market. So at that time it was 208 and now it is for the same product, it is for 176 rupees. So why this difference? Because here we have having an advantage of claiming input tax credit. So he manufacturer paying to the government 3 rupees because he is claiming the benefit of 10 rupees and here wholesaler he claims the benefit of 13 and he pays only 2 rupees to the government and finally retailer he pays only 1 rupee to the government. So the final tax paid to the government here is 16 rupees and here in the previously it is 58 rupees. So this is the basic difference. So how the price was there in pre-introduction of GST, now post introduction of GST, there is a difference. So this we are calling it as a cascading effect. In previous period also we are having the input tax credit which we can easily claim, but that benefit is not there in all cases. So there is a tax structure and ITC availability is limited to specific taxes, and tax calculation, it is compounded across the stages, and there is a higher due to tax on tax. The same illustration in our book, in our material also, you can refer the cascading effect of tax on tax. So the same example we can see here in pre-GST regime. This is in page number 8. No? This same illustration is in page number 8. So it will be in a detailed manner also. The one which I have shared you, the same here, but we can see step by step. In pre-GST regime, when a manufacturer A sold goods 1 lakh to dealer B from Gujarat to Haryana. So please look into that. A is a manufacturer. So manufacturer, that in a pre-GST period we were having excise duty. All manufacturers has to raise invoice along with the excise duty. So he is liable to collect and pay excise duty and CST. So this is central sales tax. So central sales tax meaning is, if any movement of goods from that is sale of goods from one state to another state, we call it as a central sales tax. The tax charged for that sale, that is central sales tax, is applicable. Central sales tax at the rate which is 12% for excise and 2% for CST, being an interstate sale. Dealer B in turn sells it to dealer C in Haryana after adding 10,000 rupees and charges VAT on such sale at the rate of 12%. So now starting from the first transaction, so that manufacturer he is for how much he is selling? He is selling it for 1 lakh, and the excise duty here is 12%. So he has to pay tax to the government 12,000 against the excise duty. Then if you see central sales tax, which is 2,240, that how that 2,240 is derived on 1,12,000. 2% is the CST. So 2,240. So that now the total invoice value is 1,14,240. So the manufacturer has to pay to government total 14,240. Now next transaction, from the manufacturer it is sold to dealer B. So the manufacturer from the Gujarat to Haryana it is. So we were charging that CST here. Now the product is moved from B to C. So B to C, the amount here is 1,24,240. How 1,24,240? Because the total invoice value is 1,14,000 and I am adding my margin of 10,000. So now he added his margin. Now the sales value has gone up to 1,24,240. Then the next thing is VAT. So on VAT he is adding 12%, which is 14,909, and the total invoice value is 1,39,000. If you see how much tax he has paid to the government total because of this particular sale, 29,149. So now in this regime the following are the components of the VAT. So if the B is a manufacturer, he can claim the benefit of excise duty. Because of excise duty and CST, he is not eligible to claim the input tax credit. So that is why the price has inflated very high. This is the reason which this has happened in the pre-GST. I am sharing this. So how now the final consumer is benefited, that also we will see. So if you see the below transactions, on actual prices 1 lakh, excise duty, CST, VAT. So since the credit for excise duty and CST was not available to dealer B, excise duty and CST considered as a cost. So if B is a manufacturer, then this will not be a cost to him. He can claim that benefit. Since he is not a manufacturer, he has to consider as his cost, and on that cost only he is adding 12% VAT. So such a tax on tax, we call it as a cascading effect. So the because in many places or in many other seminars also you will come to hear about this term cascading. So cascading means tax on tax. So now the same example only, how because of the GST the cost has been reduced. So the sale of the goods, the price is 1 lakh. On that GST 12% is added. So the GST 12,000. Now the sale price is again 1,10,000. He is adding his margin also, and the GST comes to 13,200. The amount payable to the government is 1,200. So the credit, why 1,200 only? Because he is availing the benefit of 12,000 when he purchased from A, and here now his GST is 13,200. So there is he is claiming the benefit. He doesn't want to pay entire 13,200 to the government. He pays only 1,200 to the department. So this is the difference. Since the credit for GST paid by dealer B to dealer A is available, the same is not considered as a cost. So any doubt, please let me know. Any doubt you have? Any? So because these dual structure, and if it is a cascading effect, you will come across whenever you go through the GST related or in many seminars, you will come across these particular two terms. So it is very important to know the meaning of this cascading. So so once again, hello, once again, because your voice is not clear. Yes, can you please repeat your question? Yes. Correct. So, one second. So here so your question, please let me know your whether my understanding is right. So you are asking like how this 14,909 is arrived or what? Okay. Let me share my screen. Whether my Excel is visible? Okay. Okay. 1 minute. I am just changing the. Okay. So here we are seeing 1,14,240, right? That manufacturer is selling 1,14,240. And when B is selling to C, he is adding his margin of 10,000, right? So that price comes to 1,24,240, right? So on that he is adding his VAT of 12 percentage. So now the final price is 1,39,149. So what we are trying to explain is, in the pre-GST period, if any sale happened from manufacturer to any dealer, the dealer is not eligible to claim the input tax credit, that is the benefit of excise and CST. So if he is eligible to claim now entire VAT of 14,909, he has to pay to the government. Otherwise, like 12,000 and 2,240. If he is eligible to claim, that is in the pre-GST, like excise duty and CST. This is, I am saying, this is excise duty and this one is CST. Since B is a dealer, he is not eligible to claim these two amounts. This is his cost. So the ITC, this we call it as ITC. This he is not eligible to claim. He has to pay the entire 14,909 to the government. So if he would have been eligible, then it's only 669. So now these type of issues or the benefits are there in GST period. Huh. Cost for the dealer, yes. It is no, CST, it is because of the state, and excise duty since A is a manufacturer. Yes. Excise duty is applicable irrespective of any states. Like if he is a manufacturer, then it is manufactured in his plant. He has to raise the invoice with excise duty. Yes. So this I hope this cascading effect you got it, or still any clarification is required. So you are aware of this earlier, or these things? So, yes. No, no, yeah, actually this is in post GST it is not applicable. So all these multiple taxes only, now it has been come to single this things. You can refer this thing one. So everything has been moved as a GST only. There is no concept of excise duty post GST. So actually what the cascading effect, from this cascading effect what we are trying to explain is, now the same thing if you are it is 1 lakh, right? It is 12% GST and the total has come to 1,12,000. Now this is the transaction between A to B, and now it is B to C. This is the final invoice value A to B. Now he is B to C, he is adding the profit of 10,000. Now the value is 1,22,000. This is his profit, and it is 13,000. I'll add here. GST is 12% here, and this the transaction is A to B, and here it is B to C. In this case 1 lakh is the price and 10,000 is his margin, and now the price is 1,10,000. On that 12% GST. and the final sales value is 1,23,200. So when B is selling to C, how much he will pay tax to the department? B to C, how much tax he will pay? To government. This is the very important area where you will understand clearly about the ITC. So when B is selling to C, how much he will pay? Right. So 13,200 is his tax payable, and already he has availed the 12,000. So minus, I'll pay 12,000 and keep this as a liability as a minus. Then he will pay 1,200 to government. So when, how you will be, the same thing, how you will be recording in your books, like a purchases account debit and GST receivable account debit to vendors. So the same thing when it comes into the your opposite side, like your when sale has happened, your debtors account to your sales to GST payable. So same thing. So when this, at the time of receivable your GST is 12,000 and payable time your GST is 13,200, and finally your payable is still 1,200. So even in your books also you will be able to find those in the records. So this we call it as an input tax credit. This 12,000. So now you would have got some idea about what is ITC is. So because we have a separate chapter ITC fully, like what are the products where you can claim ITC, or the eligible items where you can claim ITC, non-eligible items, how much percentage that will be having. But now you will you just please understand what is input tax credit. So any doubt, or those who are in call, still you have any doubt? Yes.
One more thing I have to ask.
Yes.
In case I am importing a part from outside of India,
Okay.
the GST will be applicable on my import price or import price plus custom duty.
It is import price plus customs duty. So now that that is IGST separately we have integrated central and the sales tax. So central goods and IGST separately we have, that we will be taking it. But now it is including the customs duty as well, integrated goods and service tax. So somebody is telling, sorry. Actually here some volume is having some issue. You are saying something, sorry. Can you please please ping on Teams. Actually here I have some volume is not clear. The sound is there in all class. What? Some sound? No? Here only. Hello, those who are in call, you are telling something. Can you please ping on a chat?
Yes, ma'am.
Yeah. Now I can hear your voice now. Can you please repeat your question?
Ma'am, అవకాశం ఇప్పుడు delay అవుతుందా?
Okay. Again, your voice is so low. If you please ping on Teams, it will be easy.
Ma'am, chat box లేదు.
Okay. No, I have not received your message yet. Once we receive, I will let you know. Now we will move on to the next thing. Sorry, somebody has shared some question, right? But still not received on Teams. Um, please check. So one more thing in the GST part which in the basics you need to understand here is why we go for registration of GST and who are the persons who are eligible to go have to register. So crossing the turnover, who is crossing the turnover, that we are that aggregate turnover we will study. Then legally recognition as supplier, and those who are claiming ITC and passing the ITC, and there is a voluntarily who they can also go for registration of GST. So these are the very important. Not everybody has to go like a PAN number. Everybody is taking the PAN. It's not applicable for everyone to go for the GST registration. Only few identified persons like who is crossing the turnover, what is the turnover limit, and who are in which state what is the applicable turnover limit is there, and the legally recognized as a supplier, and whoever is claiming ITC, and who is passing on the input tax credit, and who is voluntarily he is opting for the GST registration scheme. So these are the persons who are required to go for GST registration. So now in this same you can refer our materials also. In the concept introduction to the GST law, we have the article, there is an amendments made by the constitution. So the president within 60 days, there are questions majorly from the articles also, like which article explains or which gives the brief of this GST related. So the president within 60 days from the date of commencement of constitution constitute a council, that council is called GST council. The president has since constituted the accordingly he will constitute it. Who is the chairperson of the GST council? He is the union finance minister, and the union minister of state is in charge of the revenue of finance, which is we call it as a member, and the minister in charge of finance or taxation or any other minister nominated by each state government. So they are the members of the GST council. So the members of the GST council, they choose among themselves the vice person of the council, and for such period they will decide it. And the GST council, they have the recommendations are for the taxes, cesses and the surcharges which may be subsumed in goods and service tax, and the goods and service tax subject to or exempted from the GST. These are the things which will be discussed in the article that is once the GST council is formed. Then the model of the GST laws, principles of levy, and the apportionment of goods and service tax, and what is under 269, what is the threshold limit may be exempted from the goods and service tax. So these actually in all exam papers we get what is an aggregate turnover means. So aggregate turnover we will be reading now. It is 10:25 actually, now in another 5 minutes only. So we will go in brief. Actually today I have planned for RCM related, which is reverse charge mechanism, and exemption of goods, and what are the exemptions in place of goods and in place of services. So these two are very very important. Actually I planned for it, since these concepts were not cleared, I heard it. So just to for the introduction purpose, again we were back to that introduction, what is the GST and what councils, and what is cascading effect, what is ITC, dual tax structure. These concepts were not clear I heard, so I was just back to that previous class only. So in the next class we will go deep into the exemption of goods and the services, and what is RCM, and what are the sections which are covered, when we should treat, and what is the treatment for the RCM, and these are the major things in it will get covered in the supply chapter only. So please remember all those supply definitions and schedule 1, 2 and 3. With the, based on this 3 schedules only, our entire GST is covered. So we should all remember about this 3 schedules. That is very important. And this theory part, I will not give bore every time reading this theory. So just in our class, half an hour or 45 minutes, we will look into those theory parts. Like I will not take much time on theory parts. We'll give you the summary, like what is the constitution or articles is there, just the summary of it. So based on that you can brief it. And next thing is, we will be going into the core area of GST portion only, because that is the main pillar for the final as well. So what is a supply, what we call it as, and what the RCM exemption part, and the time of supply, place of supply, and we have valuation also. So valuation chapter is very important. Like we have seen now transaction value. So the goods GST is charged on the transaction value. So if it is a transaction value, supplier gives us any discount. So say for example the material is 1000 rupees and he has giving us a discount of 100 rupees, whether the GST will be charged on 1000 rupees or on 900 rupees. So these are very very important, and these are the very core area in the GST part. So those things we have to focus more. Uh, then these also, this is also some 5% of our 50% marks. Out of that 5% is getting covered here. So since these are the very foundation and the basic in your bringing to the core part, so I'm just want to share in this 1 hour these things. So now from the next class onwards, we'll go into core of this GST part only. Maybe for half an hour we can spare for this theory portions. And I will try to speak in Hindi also, because till date I have not tried speaking Hindi. So I'll just add some Hindi also in the middle. So it will be more interesting in the class as well. So today, just as a summary, we have seen what are the two types of taxes, the difference between indirect tax and the direct tax. So indirect tax is on the based on goods and services. So then very important terms which we have seen is the progressive nature and the regressive nature. Progressive nature is based on your income up and down. We needed to bear our direct tax. But regressive in nature means whether he is rich or poor. If the product is sold in the market for 10 rupees, everybody has to bear that entire 10 rupees only. So that is regressive in nature. Direct tax, there is a possibility of tax evasion. It is in your hands whether you are going to pay the tax liability or not. But in case of indirect tax, you cannot evade it, because we ourselves did not know it that GST is already included in the price of the goods. So the separation of it we will not know. So we are paying, the tax evasion is hardly possible in case of indirect tax. So these are the major things we have seen today, and we have seen about the dual tax structure. So previous prior introduction to GST, the reform is not there, but post introduction we can see how much is going into the central government and how much is to the state government. And we have seen about the cascading effect. That term is very important. So it is called a tax on tax. So what is tax on tax? Because in the pre-GST period, if I am a manufacturer, in my invoice I will charge excise duty, and if I am selling to other state, in that case I add CST. So if I am selling it to a dealer, he is not having the eligibility to claim that credit. So he has to consider these two, excise duty and the CST, as his cost, and on that cost only he will be adding his margin, and then he sells to the final consumer. So this I think. So we will see about customs also. 10% is for customs. So we need to focus on customs where we can score easily those customs area. Because even in final we have 30% of marks is for customs. So we need to focus on customs, and most of the time we have to give more time to the GST part only. So any questions or any doubt, please let me know. This is our plan for our further classes. So mostly we will be into the core area of the GST part, because very important in inter as well as in final, this GST only will be separate subject for 100 marks. So then I will not give much of this theory part. So you just for half an hour or 40 minutes we will discuss on this theory area. So those who are on call, if any doubt, please let me know. And today, since we have from 11 o'clock some motivating speakers meeting is there, and request all to kindly join in that meeting. So today we'll close for the session. Yes.
Ma'am, up custom to delay Latina.
Sorry.
Ma'am, up custom to delay Latina.
Yes, customs duty also, yes, customs also. We have 10% from customs also, no? So from next class, I will just bifurcate our entire hours into 3, like theory part some few minutes, and the core area of GST into some 1 hour, and for some half an hour we will look into the customs area. So thank you all for joining today's session, and from tomorrow, from next class, we will look into the core part of the GST. Thank you.